Hey everybody, I've got a treat for you today. I'm talking to Kevin DeMeritt, the founder of Lear Capital. Kevin, tell us a little bit about Lear Capital.
Yeah, I started Lear Capital in 1997. It's a physical precious metals company, so we deliver physical precious metals either to IRAs or physical delivery to someone's home or a depository that they choose. We've done about $3.5 billion worth of transactions since the beginning of time. And right now, I think we're the only company out there that has a 24-hour risk-free purchase guarantee, meaning that we really wanted to help out our customers make a purchase. We get them an invoice. They get to look at it and make their final decision within 24 hours before they purchase and send us a wire or a check. So we're happy about that, and hopefully the customers are too.
And I can tell you, having done it myself, it is absolutely seamless. So after we get through this interview, if you want to click on the link or make a phone call, please do so. But we're going to talk about gold and investing and the tumultuous times we're in right now. So before we get there, Kevin, one of the questions I have is, why did we ever get off of the gold standard?
Yeah, Barry, that's a great question. A lot of people ask that. And one simple reason. You can't print money. You can't print the amount of debt that we have if you are on the gold standard. So basically what the gold standard did was prohibit the government from printing money without backing some portion of that money with gold.
Oof.
So as soon as you're off the gold standard, you can just print away like we are now with this quantitative easing and never back it with something of value. So that's the big reason that the U.S. government wanted to get off the gold standard.
So my second question I was going to ask that followed up that question, you pretty much already answered. I was going to say, is there any possible way for us to get back to the gold standard? And it sounds like what you're saying, no, because we're so far in debt at this point that we probably couldn't get back. Is that true?
Yes and no. So if you wanted to back 100% of our debt with gold, it's impossible. There's not enough gold out there. If you wanted to back some portion of the dollar with gold, then yes, you could make it a small fraction. And even that small fraction would help prohibit the government from printing up so much money, because you would still have to back some portion with gold. Mm-hmm. Matter of fact, Russia did the same thing when we put all the sanctions on them and their dollar started falling, the ruble started falling. They backed some portion of it with gold and it went right back up. So the power of gold is very powerful to back a currency and give it stability.
Now, is it better to have that during war times or peace, or is it doesn't matter? As long as there's debt and has to be secured, it's better to be with the gold?
Well, I always think a strong currency is better, because look at what's happening right now. We wouldn't have all this inflation. I mean, basically, the definition of inflation is too much money chasing too few goods. If they can print money willy-nilly, they couldn't do that with the gold standard. So we had much less inflation when we were on the gold standard than we had through the 70s or even now today.
And with all the problems over in the Middle East with Israel and Gaza and everybody kind of on edge over there, how does the oil market affect currency, and then and along with that, gold as well?
Yeah, great question. When oil goes up, people think about this backwards, but when oil goes up, because oil is denominated in the world's reserve currency, which is US dollar, our dollar gets stronger, because everybody has to continue to accumulate dollars to buy the oil that is higher. So they don't reduce their oil consumption when oil is higher. They need to purchase more dollars or get more dollars to buy that oil. So it's actually a good thing when the oil price moves up for our dollar. Not so much for the inflation here in the United States, but for our dollar, it's not a bad thing.
Now, with depleting the standard the oil reserves in our country, does that affect anything?
Well, what he was trying to do was decrease inflation, try to keep the oil prices down, because oil and gas and things like that, energy is a big portion of inflation. So did it help? It doesn't look like it. I mean, the inflation rate is still higher, and it wasn't transitory like they thought even when they depleted. So I don't think it helped at all, and it might hurt in the long run. If we had a war today and we didn't have our strategic oil reserve, that's a problem.
And he drained it. He completely drained it. I mean, it's just not there, and we're not drilling for more. So I don't know what we're in a bad situation there. So I don't have a ton of commodity-based investment experience. My personal and my wife, our experience is based upon real estate. So between the two of us and what we've done, we've probably purchased and sold over 1,000 houses over 20, 25 year period. And we're always into this state of flux. And Who made this statement? I don't know if it was not Warren Buffett. Might have been Rockefeller, and said the time to buy is when blood is running in the street. And I've been accused of being a vulture and taking advantage of people because I like buying foreclosures. I can deal with the bank directly. I can deal with an owner who's in distress, whether it's divorce, behind on their mortgage. So whether the market is up or down, it doesn't matter. A good investor can make money. Is that the same thing with gold?
It is. I mean, it's that way in every investment, right? You made a perfect example with real estate, and the same holds true with gold. So how do you value gold? The best way that I have found, and most of the large banks would agree with this, but most of the large investment banks, is debt in the United States. So there's a 92% correlation between the debt in the United States and the value of gold. 92%. Both of us would head to Vegas if we could play a table that had a 92% probability of winning. But that's what gold has. So that probability right now, or that correlation right now, I should say, is projecting gold at $3,200 an ounce. And we see Bank of America recently, just in the past week, and Goldman Sachs both come out and say, hey, look, the price of gold looks like it should be around $3,000 an ounce. Well, of course, when there's a 92% correlation, you're not going to be that far off from that prediction. Now it's just a matter of time. So when I look at it, the amount of debt that we've created gives us a pretty good indication where the price of gold should be, and we're around 30% undervalued today. So that's where we are as far as the price of gold is concerned.
Undervalued?
You know, the price of gold's around $2,350, and it needs to be $3,000 to get back to that correlation. So let's call it 27% or so to get back up.
Is the market for gold as volatile as it is for some of the other commodities?
Yeah, it can be volatile. Gold's a little less volatile than, let's say, silver. And usually it's a hedge against volatility. So less volatile, but yes, it has volatility just like other investments. So you don't want to purchase when the correlation says gold should be 3,000 and it's 3,600. You need to buy it on the other side of that equation.
Now, you mentioned silver, which I think a lot of people don't really know the value of investing in silver. It's one of the things I've been looking in and talking to you guys. And, you know, my dad was always, he loved silver because he could get in. My father was a contractor. And so when he was a contractor, he always knew silver and copper were two of the things that he always knew, because he knew if it was air conditioning, piping, and what they were doing, you know, he's like, get in silver, get into copper. And I'm like, I don't know understand this stuff, because I worked for Prudential Beach a long time ago, and I'm like, it's gold or real estate or currencies. I don't know copper and silver. So what makes silver so appealing?
Well, look, it's the sister of gold. So if the gold market moves up, usually silver moves up afterwards. So you always see a lag.
Okay.
We've seen the gold market skyrocket, and now the price of silver is starting to move back up. But when you look at the price of gold, the last time silver was $49 an ounce, the price of gold was just $2,000 an ounce. And here we have the price of gold at $23.50, and the price of silver is right around $30 an ounce. So it has some headroom to get back up to the $50 range, and I actually think that it will, especially if gold goes to $3,000. The other great reason to own silver right now, it's just completely undervalued from the standpoint of supply and demand. So starting about 2 years ago, we had a surplus of silver in the market, around 400 million ounces. Today, we're running a $220 million deficit, mostly because of the solar industry. You wouldn't have solar unless you have silver. And in the next couple of years, they're going to increase the efficiency of solar, and they need more silver to do that. So the silver portion of that solar panel should go up dramatically. So that's where we are right now. And I don't think you're going to get out of this deficit anytime soon with silver. So if you have more money chasing a fixed supply, basically, the price should move up, and that's where the silver market is.
Where is the, how can I say this? Where is the biggest source of gold and silver right now, globally? It's not coming from America, right? We're having to mine it someplace else?
Yeah, some portion comes from the United States, but you still have the biggest portions of the metals coming out of South Africa, Russia, some portions in China, although they don't really release it. China keeps most of their production. And you do have Canada and the United States, Australia. You know, those are the major hubs for most of the metals. unfortunately with silver, or fortunately for us, but unfortunately for the silver market, most silver comes as a byproduct of copper, of platinum, of gold.
Yeah.
So there's very few mines that actually mine silver because it's just not profitable to do so. The silver price is too low to actually pull it out of the ground and be profitable.
So I was looking on your website, and there's something I got to ask you about, and it's, please explain to me and everybody else what you're talking about with de-dollarization. That seems really interesting, and it's kind of scary when you think about it at the same time. So what is that all about?
Yeah, so de-dollarization is mostly revolves around the world's reserve currency. So the best way I could explain this is, in the last 600 years, there's been 6 reserve currencies. So it started off with Portugal, went to Spain, then Netherlands, France, Great Britain, and now the United States. Each one of those, Barry, lasted about 100 years. The United States is right at that 100-year mark. So what destroyed each one of those currencies from being the world's reserve currency? And it's one thing: debt. An enormous amount of debt that the politicians, fiscally and monetary policies just went to hell, and the currency collapsed. So who takes over? Well, right now, who everybody's nervous about is the BRICS currency. Most people have kind of heard about this BRICS currency, and it's Brazil, Russia, India, China, and South Africa. And they are backing, or say they're backing, some portion of that currency with gold. Well, when you have a currency with this much debt behind it, and then you have a currency with stability and gold behind it, that's where people are going to move. And Barry, I really look for tipping points. And the tipping point in this currency is if you just took those countries plus the few other countries that are involved with it, it's about 40% of the population of the world.
Wow.
That's starting to get near a tipping point where you say, okay, the US dollar may not be the world's reserve currency longer than 105, 107 years down the line. Why is that concerning is really probably what everybody's asking. And the best way I can explain this is, think of Apple stock. If we took 50% of Apple stock and we said a mutual fund's going to hold that over the next 20, 30 years, and it's not going to ever be available, and the other half of the stock is going to be available and you can trade it. One day you wake up at the end of that 20 years and the mutual fund says, hey, I don't want to hold Apple stock anymore. We're going to liquidate this other 50%. What's going to happen to the value of Apple stock? It's going to fall. I don't know how much, but it's definitely coming down. Think of that as the United States. Countries hold trillions of dollars worth of U.S. currency outside the United States because it is the world's reserve currency, and now they're starting to liquidate and look for another currency. What's going to happen to the value of the dollar when all trillions of those dollars come back to the United States? Again, the definition of inflation is too much money chasing too few goods. The value of the dollar comes down. That's what's been happening, and it could accelerate because we have China and Russia and all the other countries liquidating.
Now, you mentioned something. Why are these other countries wanting to get away from the dollar? Is it political, or is there a reason they see we're holding too much debt? Is that specifically the reason?
Debt is the big reason. The United States dollar since 2000 has lost 24% of its purchasing power. So you're a country out there and you're holding trillions of dollars. I mean, China was holding $1.2 trillion, and the purchasing power of that dollar falls 24%. Who wants to hold it? So they've decreased that down to 800 billion. They liquidated about 52 billion in the first quarter of this year, and I would suspect they're going to continue to liquidate even more. So the more debt, think about debt. You're holding a dollar. The United States adds another trillion or $2 trillion in debt. The value of your dollar that you're holding falls every time they add another dollar to the system, and countries are just sick of. I mean, think about this, Barry. We went from $8 trillion in 2008 of debt to $34 trillion today. The value of our dollar is not what it was in 2008.
Right. Now, if you can see that and other economists can see that, why aren't we trying to fix it? Why aren't we trying to do something and say, listen, we're on the horizon, we're seeing this great de-dollarization. Why aren't we putting things in place right now to basically make sure that doesn't happen, or to tamp the brakes on something?
Yeah, because I think politicians care about getting elected today, not what happens to the country X period. So if we want to change that, we need to change the politicians, because they just want to get elected, right? If you take that out of the equation and you said, look, our dollar is going to be absolutely worthless if you guys keep spending money and creating these deficits, if that's what we all voted for, then that is a guy we need to vote for, right?
As much as I dislike Biden, this can't be all on him. I mean, the debt's been growing and growing and growing, right? So is it basically a nonpartisan that they both just look the other way and say, hey, just pile on as much as possible?
Yeah, about 10 years ago, they had the modern economic theory, which is we can print as much money as we want until a certain point. I don't know when that certain point is, but at a certain point, things start to break, and you're starting to get there. And the reason I know it is because this BRICS currency and the world's reserve currency, our currency, is being challenged. And as soon as that happens and you lose that status, a lot of things change. Because the world needs the US dollar to go buy oil and so on and so forth. If we were not the world's reserve currency and our currency fluctuated along with commodities, we're like Europe. The price of gold or price of oil could go up $20 and your currency could fall at the same time. Your inflation now just went up by 40% in that particular commodity. Wow. That doesn't happen to us. We only have to worry about one part of the equation. So there's a day of reckoning going to come for our debt. And I mean, look, Jamie Dimon, the CEO of the world's largest investment bank, said, debt is concerning me. We could get stagflation and other black swan events if we don't start fixing this issue soon.
It's scary because as you're talking here, I can almost see people looking and go, are we in a doomsday-like situation? Are we going to be able to get out of it? And at this point, maybe who knows which way the country is, but it's almost as if people that personally need to begin doing their own hedge. So what would you recommend? Like, how much should somebody keep in commodities, gold and silver versus cash versus other of their investments?
Yeah, so great question. You brought up real estate. That's another great inflation hedge, right? So what I think of as an alternative physical type investments like real estate, precious metals, things like that. Those are going to be your hedges. And each one of those, Barry, is going to depend on what somebody's education level is on those particular type of investments and what they're trying to do. If you need, every nickel of your investment as an income producing investment for retirement, you shouldn't invest in gold. But if you're trying to protect some of your investments and maybe you've got investments in real estate or other income producing investments, you feel comfortable there, then you should have some portion. 5% is usually a low point, up to 20%, depending on where you are in life and what you're trying to accomplish. And one of the reasons we try to educate everybody first is for that exact reason. Think about your situation, understand the market so you can make an intelligent, informed decision on if you should have some gold and how much you would feel comfortable with.
If shit hit the fan and people got in trouble and things started happening, there was a war that broke out or something happened in this country, like another thing that happened 2 years ago. I can't say the word, Kevin. You may not know that when I do video, I can't say the big C word, but if we got to that kind of situation and you got your money tied up in gold, how liquid is it and how can you access it? And are there, I know when I would buy a house, I always had a basically a box of buyers I know I could go to. I may take a hit if the thing doesn't sell correctly, but I knew there's a bunch of people who were going to pick up this property and they're going to rent it out and do whatever they need to, but I could get out of it. How do you get out of the gold market if things go to hell?
Yeah, great question. Gold is the most liquid investment in the entire world. You could take an ounce of gold to China, to any other country, and you're going to get the exact same price with it. It's denominated in U.S. currency, and you're going to get that price anywhere you go. You could walk into a pawn shop. You could walk into a bank or a brokerage house. They're going to give you the value of whatever that metal is worth on that day. Now, if you purchase from us and you don't want to go that route, then it's easy. You give us a phone call. We lock in the price on the day that you call, even though you're holding the metal. You keep the box that we send it to you in. You replace it back in that box. We send you out a Federal Express label through email. Just place that on the box. That covers the shipping and the insurance, and it's shipped back to us within 1 to 2 business days, depending on if it's silver or gold. Weight makes a difference on shipping, so we try to figure that out for you. And then we turn around and send you a check. So it's very easy to get out. If it's an IRA, just give us a phone call and we liquidate it out of your IRA and you have cash back in. your IRA. In a doomsday scenario like you're talking about, the IRA company we work with actually will physically deliver it to you. It's one of the only ones that does. So if you said, hey, it's a doomsday scenario, I don't want cash, I want my gold, they would actually deliver it to you.
By the way, if you want to pick up this report on de-dollarization, just go ahead and click below, or just go in the description, or just call the number on the screen, and one of Kevin's guys will make sure you're taken care of, and they'll get that out to you. But everybody is talking about crypto right now, and even Trump came out and said he's not going to hurt crypto. He's not going to try and push central bank digital currency. Give me both sides of that. One, if there is a government-run digital currency and crypto, how do those affect the gold market?
Well, I think the crypto market doesn't affect gold all that much. I think you have two different types of people. Hey, I'm either a gold guy or my crypto guy. There's some people in the middle that will do both, but what we find is you're either a crypto guy or kind of a gold guy. If the government comes out with a digital currency, that's a whole nother situation. I mean, you've got privacy issues, you've got control issues, you've got a lot of those kinds of issues that people are worried about. And then I think the gold and the crypto market are probably going to really take off. We kind of saw the same thing in 1999, right before Y2K, when everybody thought the computers were going to get shut down. We just had people taking a bunch of money out of the bank and buying, precious metals. And then once nothing happened, they would liquidate and go back. So I think this would be a little bit different because, look, you're going to lose your privacy and you're going to lose control, a little bit of control of your money, because the government can see every single thing you do with that government-controlled currency.
Now that to me is more of a doomsday scenario than a war. I'm sorry, because if they can control what you buy, how much you can spend, when you can spend it, that's absolutely scary. So one of the things I get conflicted by is, what exactly is an ETF?
So an exchange traded fund in gold is just what an exchange traded fund means for people, or they think it means, is they're holding this physical gold and it's going up and down, and I own a portion of that, so I'm going to own a portion of this physical gold going up and down. That is, for the most part, not true. Most exchange traded funds hold a portion of gold, maybe 80% or 90%. The other 10% is just a hedge going on, not physical gold itself. So the way I like to explain it to people, Barry, is if you called me up and said, I want to own some gold, and I said, great, Barry, send me in $10,000. And what I'm going to do is I'm going to buy 80% of that in physical gold. Then I'm going to buy a paper contract for the other 20%. And on the 80% in physical gold, I'm going to send that over to HSBC Bank in England, which is where most of this exchange traded fund gold is held. You'd probably look at me and say, wait a minute, I want physical gold. I don't want my gold held over in England, and I don't want 20% of it in paper. I want physical gold in my hand that I know is there. That's the biggest difference. There are applications for the exchange traded fund that most people say, hey, look, I just want to deal with my broker, and I trust them. And so the fluctuation, I'm just going to buy, sell all the time. That's really not physical metals. Most people buy the physical metal, hold it for a period of time. They're not there to day trade and things like that. So if you're a trader, exchange traded funds work pretty good compared to holding physical gold. But if you're a longer term holder, then physical gold is going to be a better shot.
That's a great explanation and definition, because I think a lot of people think, and I personally thought myself, that you got a certificate in the mail and said, oh, I own X number of ounces of gold, but I never had it. When you're dealing with Lear, you're getting the actual piece of gold, coin or whatever, correct? Yep. Wow, and what is it? Is it a coin?
It depends on what you're looking at. I mean, we have kilo bars, 100-ounce gold bars, American Eagles from the U.S. government, maple leafs from the Canadian government. We probably have one of the largest inventories in the country. So whatever type of gold that you're interested in, and if you're interested in longer term, we can help out. And again, in the information we send out, tries to kind of lay out what are the pros and cons to the different types of gold, so people understand maybe what would fit in best for them.
So what you're saying is, as well, is that if you wanted to make gold your IRA or 401k, you can convert that into a gold-backed or actual pieces of gold for your IRA?
Correct. Yeah, you could take an IRA that you have today and take any portion that you would like of that. So you don't have to take the whole thing. You could just take a portion, move it over to a gold IRA. We're authorized to do that, and we can set that up. There's no tax ramification. You're still in an IRA, and then you have physical gold in an IRA. and you can buy and sell it just like you would a stock. It's just a phone call to us to do the buying and selling.
Wow. Yep. That's incredible. And when again, in real estate, I've got guys who use their IRAs and their 401ks to actually fund mortgages. And what I mean by that is that they'll get a mortgage or basically borrow against their 401k to put a mortgage on a property so we can flip and do what we need to. Obviously, gold is the biggest collateral out there, so I'm sure you could probably do the same thing with that in terms of if you wanted to use that as a hedge for something else.
Yeah. We actually put the physical gold into the IRA. So again, if they wanted to take physical possession, any investor could take physical possession outside of the IRA if there comes a doomsday scenario. But you would have the physical gold in your IRA.
Wow, that's cool. Now, I know this is probably going to be a question because I get a wide range of people who watch the videos I put out. I've got people who are established who are retirees with IRAs and 401ks, and I've got some younger people who are seeing what's going on and basically, how do I say this without being offensive, becoming more conservative and becoming more aware that something isn't right with our government and the financial institutions and how things are going. What do you need? Earlier you said, basically 5%, and you just figure out where that is at comfortability. But what do you need to actually buy in? I know gold, you said, is $2,300 an ounce. What is silver at this point?
It's around $30, almost $30 an ounce.
So there's a benefit there to get in. You don't have to wait. You can get in if you don't have to have 10 grand, but you can get into silver right now, no matter pretty much anybody at whatever level of income they're at.
Yeah, you can get in. With IRAs, because of the IRA fees, so it's about $150 a year. Typically, we say that should be at least $5,000 or more. But outside of an IRA, people can start whatever they feel comfortable with. And we try to help out a little bit because obviously there's a fee if you're going to talk to one of the representatives. But we have a website with pricing on there that people can go to with smaller amounts, and the fee is a little bit less. And when they build up, then they can switch over to one of the reps, and we can help you through the process for longer term investment.
In closing, Kevin, I'm going to put up the De-Dollarization report, and once you get that, is there anything else that people should know about investing in gold and silver at this point?
No, I think we covered a lot of it, and I think your last point is well taken, and the thing we try to do around here, education. I say that the U.S. education system should help people more with, investing, because that's where I think everything is lacking. So hopefully our information, at least for the precious metals market, helps people get educated so they can make an intelligent, informed decision on this is something I want to do or not, and how much would I feel comfortable doing with my overall portfolio and their goals.
I think it's important. I mean, I get so many comments, what are we going to do if this happens? And I think the education that Kevin can provide and his guys, plus just looking around, what's going to happen with the election. So in closing, I have one question, and I'm not going to ask you to pick a horse in this race, doesn't really matter. But what do you foresee happening if X guy versus Y guy is elected?
I believe that both Biden's invested, we have a lot of problems. It's spending is completely out of control. No fiscal or monetary policies make any sense to me at all. Trump gets in there, and you got a business guy, you've got a guy that understands a lot of things. And I think he could stamp out inflation much better than Biden, because he's just a political puppet, in my opinion. And at least Trump gets in there and says, hey, look, we got to do the right thing for the country because he loves the country.
Right.
And that's our best shot for a stronger dollar, less inflation, and more fiscal and monetary reforms that are needed.
How long do you think it would take to get the country turned around where it is more stable should he win?
I think it's 24 months. I think he needs 24 months to kind of, look, when you're spending this kind of money, it's a huge ship. It's a big aircraft carrier to turn, not a little speedboat. So it takes a while to get it going in the right direction. But he did a pretty good job. He's not afraid, obviously, to say his opinion and really get out there and get ahead of things. So 2 years from him, if it was Biden and he really wanted to do it, it'd probably take him 8 years, and he doesn't have that long.
You're in California,
yes.
right? I'm here in Boca, right north of Miami, and I got missiles. I got submarines in my backyard firing off test missiles. I mean, I never thought I would live and see the day where I would just be able to look up and see test missiles flying up, from a Russian submarine right in our backyard. If people aren't taking this stuff seriously, if you're not looking to do something with your money, whether it's this much or a lot, do something with it. Call Kevin, call the guys at Lear Capital, make something happen, because you never know. I would never thought I would wake up and see a submarine parked off the coast of Florida from Russia. It's like the Cuban Missile Crisis, something we grew up with as kids, and now it's happening again. It's insane, absolutely insane. So, Kevin, thank you for your time. I'm going to be talking to a lot of financial guys to get them on here and start talking to you guys about what's going to happen. So I'm going to ask Kevin to come on again. We're going to have a different topic, but right now, go ahead and get that De-Dollarization report, download it, call the guys at Lear Capital. If you want to go ahead and purchase something, do it right now. Numbers on the screen. Talk to you soon.